Welcome to this explainer. Today, we're diving straight into the massive phenomenon currently dominating global markets. We have to ask, is the absolute mountain of corporate capital being funneled into artificial intelligence actually building the foundation of our future? Or are we blindly walking ourselves into a historic financial trap? The stakes here literally could not be higher.
Okay, let's kick things off with a pretty staggering number, over $100 billion. And honestly, that represents just a fraction of the capital being poured into AI infrastructure right now by the world's largest companies. We're witnessing an unprecedented frenzy here. It's basically a modern-day gold rush, except the prospectors aren't guys with pickaxes. They're multinational conglomerates with virtually bottomless bank accounts.
So, that brings us to the ultimate question we're investigating today. Are we looking at a legitimate paradigm shift that's going to change human history forever, or is this just an incredibly expensive illusion that's waiting to pop? Are we at the dawn of a new technological age, or starring in the biggest financial bubble we've ever recorded?
Let's get into Section 1, the trillion-dollar AI race.
Think about the sheer concentration of wealth and influence driving this trend. You've got heavy hitters like OpenAI, NVIDIA, Microsoft, Google, Meta, Amazon, Apple, and Anthropic locked in an absolute arms race for dominance. The FOMO's real. No one can afford to be left behind. So they're just throwing billions upon billions of dollars at the wall, hoping to secure their spot as the undisputed leader of the next generation of computing.
But here we are evaluating the landscape in June 2026, and that whole greatest bet in human history narrative, well, it's starting to show some pretty serious financial cracks. The perception of this unstoppable exponential growth is colliding headfirst with the harsh realities of corporate accounting. The initial euphoria is definitely wearing off, and analysts are starting to ask some very difficult and very expensive questions.
Which leads us perfectly into Section 2, the true cost of AI.
The crucial thing to remember is that building AI isn't just about someone writing clever code in a dorm room anymore. It requires massive, incredibly expensive physical infrastructure. We're talking about the construction of colossal data centers, this insatiable demand for highly specialized GPUs, and of course the extreme, non-stop power consumption needed to keep the whole thing running. The physical footprint of this tech is just staggering.
And this creates a frankly terrifying paradox for enterprise adoption. The entire pitch of AI to the corporate world was all about efficiency and cost cutting, right? Yet, the operational and energy costs of running these advanced models are so tremendously high that in some documented instances, it's actually outpricing the very human labor it was supposed to automate. When the robot costs more than the employee, your fundamental business model really starts to crumble.
So now we have a glaring disconnect in the market. The companies selling the shovels for this gold rush, like hardware providers such as NVIDIA, are raking in historic profits. But the gap between that wild infrastructure spending and the actual, realized profitability of the enterprises deploying the AI, it's widening at an alarming rate. The return on investment simply isn't materializing at the speed everyone was promised.
Let's move on to Section 3, the consumer price ripple effect.
Now, you might be wondering how this actually impacts you. Well, here is the exact economic chain reaction playing out globally. Step 1, corporations ignite a massive infrastructure boom. Step 2, this creates a panicked, surging demand for GPUs and memory chips. Step 3, since manufacturing capacity is finite, this triggers a severe global memory chip shortage. And Step 4, that shortage leads directly to increased prices for basic consumer electronics.
Following the money, we see hardware giants like Samsung and Micron getting caught in a cycle of component hoarding just to satisfy corporate AI demands. For sure, this direct ripple effect means your next smartphone, your kid's next laptop, or just basic home electronics are going to cost you significantly more at the store. Essentially, you're unknowingly subsidizing the corporate AI machine every time you upgrade your devices.
All right, Section 4, echoes of past tech bubbles.
They say history has a distinct, almost poetic way of repeating itself. When we plot this on a timeline, the current AI craze of 2026 maps almost perfectly onto the blind, speculative frenzies of the past. We saw the exact same thing in the 1840s with railway mania, again in the late 90s with the telecom bubble, and obviously with a devastating dot-com crash in 2000. In every single instance, massive capital was thrown at a revolutionary tech well before a profitable business model was actually established.
We all know the textbook definition of a financial bubble, right? It's when an asset's price strongly exceeds its intrinsic value, driven entirely by speculative hype. We really have to ask ourselves if investors are deliberately ignoring this reality today, totally blinded by the sci-fi promise of AI, while completely waving away the brutal underlying economics.
Finally, Section 5, revolution or financial bubble.
Maybe the most telling piece of evidence is exactly who is stepping forward to raise a red flag right now. The world's top financial institutions and researchers, we're talking JP Morgan, McKinsey, BCG, and MIT, they aren't just quietly observing anymore. Based on their internal data, they are actively sounding the alarm about an impending market correction. When institutional giants of that caliber start warning of a bubble, it's usually time to pay very close attention.
Let's quickly review the clues, because they are absolutely piling up. Number 1, staggering, historic infrastructure spending. 2, a stark lack of widespread enterprise profitability to actually justify that spend. 3, global hardware and memory chip shortages bleeding directly into consumer wallets. And 4, glaring, totally unavoidable parallels to historical financial bubbles.
So I want to leave you with this final thought to chew on. Is this unprecedented spending boom genuinely going to build a highly efficient utopian future? Or are we, at this very moment, standing on the precipice of a historic financial collapse? Thank you so much for joining this explainer. Stay curious and always follow the data.